What's up? Facebook, YouTube, Twitter, and Instagram all at the same time. Hope you guys are all doing well. Welcome to Why Invest Wednesday. Jeremy Kane with eXp Realty here, member of the Wolf Pack. Please like, comment, subscribe on all of those channels. If you're watching, if you're on Facebook right now and you're commenting, please let StreamYard know who you are. All you have to do is click a couple buttons and you can comment, and then I can see them as they happen. So hope you guys are all doing well. Give me a like and share. Continuing our tradition of Why Invest Wednesday. Today it was a little rushed. We had a closing go a little bit longer than usual, and here we are. So closing number 42 on the year. Super blessed to be in that situation. But let's talk a little bit about this. I have a client, a very savvy investor, has a ton of rental properties. This is the first property I am working with them on, and we are just kind of going through some things. She's in the industry as well, and we had some inspection issues. We ran into some electrical stuff, some plumbing stuff, and then some sewer stuff, and the sewer line was replaced from the house out to the garage. And then under the garage, it was not replaced, and it was a little bit dirty, needed to be cleaned out. This is typically a home run in a real estate transaction. If there's an issue with the sewer line, typically we get that taken care of, at least cleaned out and rescoped so that the sellers know what's going on. This particular seller took a really hard line on that, which is fine. That's their prerogative, but it just kind of opened our eyes back up to the fact that how much of a seller's market we are in, because obviously we are, being reasonable in what we're asking. The seller's drawing a hard line, so I'll give you this much. Well, the seller or the buyer's into that, and if there's issues with that sewer line, it's going to be a lot more than the concession amount. So we're working through that a little bit, but it just kind of got us talking about the emotions and how frustrating that is. And you're paying somebody a good amount and above asking and so on, and then they draw these hard lines in the sand, which is a little bit frustrating. And the honest truth is, we are still in this seller's market. We are still in this temperature that the sellers can throw out a lot of things that they want. Typically, I suggest being reasonable, because obviously we want things to get to the end, get to the table. But we are still in this point. So my client and I kind of went back and forth, and the honest truth is the math still makes sense. We hope that obviously it makes good sense and that there's not major issues with this sewer line. But we are, hoping that it just needs a cleaning and we can get it through and, go so on. But it just, got us to talking about, we are really in this market and how frustrating it is. But at the end of the day, when you remove the frustration, you take some deep breaths and you're like, okay, is this a good investment? Which is honestly, they are buying it as an investment property for some of their family members. But is this a good investment? Do the numbers still make sense? In the event we do have to make a repair on this, what are we looking at? In the event it's perfectly fine, what are we looking at? And so you sit down, you get your calculator out. This particular property will be an income property, obviously owned by one of our family members, so on. But we ran the numbers and it still made sense. And there's still money to be made in real estate, not only by investment principal, but appreciation. And as you can see, the appreciation, obviously, we've talked a lot about it, 21.7% on average in the Denver metro area this year. That's $100,000 if you have a $500,000 house, which is below the average price in our area right now. So $100,000 a year is pretty good salary, let alone if you're living in it and so on. So the bottom line is, you just have to step back. You have to keep your head. Do not get so emotional that you're just like, well, they're not going to do it, and they're being nasty, so we're going to back out and do those things. The honest truth is, if you are under contract right now, you are getting, very low interest rates, which very well could go up with what we're seeing going on in the economy. And the home prices are only going up. And we've talked a little bit about a lull. We'll kind of jump into this here now. We talked a little bit about a lull kind of things are cooling down. We've always told you that the sellers are still getting what they want, really being kind of demanding. But I will tell you, this weekend it cranked right back up, and I was lucky enough to get actually four houses under contract this weekend. But they were dogfights. We had 7 offers on my listing. Could have probably had more. We only showed it on Saturday and Sunday. Sunday was a home Bronco game, so it was a little bit slower. But 7 offers, all but one was above asking. Very competitive. People doing everything they possibly could as buyers to put in these contracts. So if you're thinking that you're going to wait till the spring and things like that, we're going to see a little jump in values from now till the spring, because if there's this much competition out there, there's 6 other hungry buyers looking for houses in that price point. And so that's just going to bump the next house and the next house and the next house value. So it's definitely something to consider when we're out there doing showings and things like that. And as a buyer, I'm telling you right now that if you're out there looking come, February, March, April, May, those numbers are going to be out crazy higher. Whether that's, at $300,000 price point, whether that's 25,000 or, that's a huge jump in these, winter months where we're usually pretty stable. Not to mention the interest rates, are going up. The Fed's going to quit buying those mortgage-backed securities by July. So we will see some interest rate hikes and things like that. You're going to be looking at, maybe $100 to $500 more on a monthly payment between now and then. Not to mention, if you do qualify, obviously you're probably not going to get that big of a raise between now and when you're shopping. If it's within 6 months, you're going to be qualifying for the smaller house, or maybe you're going from a house to a townhome and all those things. And I get it, leases and things like that are expensive to break. But if we're sitting here in this market and you're losing that much money as we go, then maybe these emotional decisions on this end are worth it, because strike while the iron's hot. People continue to, throw the market's going to crash. There's this is going to happen. That's going to happen. The honest truth is, regardless of what happens with the economy and those things, people are going to need houses to live in. And if the first-time home buyer and the primary residence buyer continues to pull back, that number right now, it's about 13% of the closings this year, or investor, that number is only going to creep up, because I know most investors, except for Zillow, apparently are diving into the market and buying up shares and doing what they can, and getting all that market share. So as those primary home buyers go down, those investors are going to ramp up, and we're going to continue to see that. And as those happen, rents go up, values go up, because there's a lot of cash floating around the market. And here we are. So if you're thinking about buying the next year, I would say let's sit down, talk about it. Let's look at your leases. Let's look at your situation and see where that goes. And even if you have a home to sell, let's sit down and look at your situation, because you're going to see definitely, say prices go up 10%. Well, if you have a $300,000 house and you're looking to buy a $600,000 house because you need to move up, well, that's the difference between $30,000 and $60,000. That's $30,000 loss there, just because we didn't sell now and buy then. So you're going to lose money that way too. So just a very interesting market we are in. And as we warned, it's going to be crazy. I beat out 5 to 10 offers on a duplex this weekend. So it's all about timing and that communication with the other agent and things like that that I'm very good at working on. But just know that things are continuing to ramp up, and as we head into November, December, I would guess that we're going to see a continual, maybe steady uptick, and let that January, February market's going to spike, because that's when everybody's waiting to get into the market. The interest rates will have risen a little bit, so people will be a little bit more desperate at that time to get into those smaller interest rates, because that's ultimately what controls that payment. So that's something that we really need to sit down and talk about, because my goal is to get you where you want to get to. And the current, real estate investment is great, and buying real estate as an investment is awesome. But if you're living in one of those investments, which all of us should be or are, we need to make sure that the house that you're in is suitable for, what you want and your hopes and dreams and things like that. Because as those continue to go up, you're going to be looking at, maybe a move up house is, 6 to 800,000 now. And all of a sudden you need, this much more down payment and this much, credit availability and things like that. So it's really important that you look at the inspection as an educational tool. You take a logical approach to what things are going to cost, what's the risk reward, and then make that decision based on logic and calculations and numbers and the math versus the emotion, because obviously a home buying is very emotional right now. It's crazy to kind of ride that roller coaster with my clients, and I do the best. I guess that psychology degree is coming into play after all, but just something to consider. And really just, no matter if you're buying a house here from me, whatever, just make sure that your emotions are flatlined. And it's hard, but just keep those emotions yourself, maybe with your significant other or whatever, and then really get down to the logical piece. Like, is this worth backing out of? Obviously in Colorado, most likely at an inspection, you can get your earnest money back, things like that. But is it worth backing out of, going back on the market? Maybe it's gone up a little bit. Maybe those interest rates have ticked up. And now all of a sudden, we're still paying that extra $10,000 that we're going to take on and as far as inspection items, but it's on another house. And that other house may have $10,000 worth of inspection items too. So just kind of a food for thought. Remove those emotions as much as possible and let the math do the talking. So that's today's Why Invest Wednesday real estate side. Nuggets and Avalanche are starting. Nuggets first game tonight. Broncos have fallen off drastically, so we'll see where that goes. I think we need maybe a coaching change or something there. But they are playing Thursday, tomorrow, against the pretty beat up Cleveland Browns. I read today both running backs and quarterback are out, maybe a couple tackles. So we should have a chance there on the road Thursday night, going on the road. We're going to go with the Broncos by 3, just like the drive for all you Cleveland Browns fans that may have witnessed that. All my Ohio people out Lake Erie, sorry about you, but the Broncos are going to pull this one out somehow, and everyone's going to love the coach again, and everyone's going to love Teddy Bridgewater again, and we'll see how it plays out. So hope you guys all have a great Wednesday. Remember, just remove those emotions unless it's for cheering for the Broncos beating the Browns. Talk to you guys soon. Bye-bye.